a great day.
Thank you.
Thanks, guys. Another great panel. I really appreciate it. Okay, so moving on. This one is one I'm personally very excited about because this is a huge topic. It's Wall Street's foray into digital assets. Josh Lawler is going to be the moderator. I'm joined by Adam Blumberg, Raymond Kahn, Bradley Kimes, Steve Ehrlich, and the one and only Tron Black. So with that said, I'll let you guys get on. Hopefully we have learned from past mistakes here and then can all get in relatively quickly and just hit the ground running here. I know it hasn't been easy. So once again, I appreciate everybody for bearing with us. This is our first foray into any kind of conference. We've never thrown one before. Everybody's at home. So adopting new technologies and learning as we go is sometimes challenging. So thank you for bearing with us once again. It wasn't perfect, but I think it's just getting better and better over time. So thanks again.
You there, man? Can you hear me? Okay.
I can hear you just fine.
Oh, okay, great. Wonderful. Hey, Tron, how are you? I'm wrestling with the worst ever bandwidth issues ever.
Yeah, I may end up having the same problem.
Okay. So I can't see who else is on here yet. There we go. We've got Bradley. All right, well, for whoever is on here, I suppose we might as well get started, right?
Let's do it.
Very good. You can hear my 3-year-old in the background, actually, which I think is appropriate for Wall Street's foray into digital assets. Yeah, emailed ahead of time, and I think we all kind of concurred that one of the best places to start here would be the question of, wow, now getting all kinds of stuff to do it later. All right, the question of where Wall Street currently is at to begin with in terms of its foray into digital assets. I guess maybe before we do that, if we have to do introductions, sorry, I'm a little scrambled. Tron, why don't you go ahead and regale everyone with your life with Raven Coin?
Sure, yeah. So I started in crypto in 2013. I worked for T0 for a while. I work for Medici Ventures now. It's a venture firm that has a bunch of portfolio companies. And as part of that, I was able to help build Raven Coin. And so that's what I'm currently doing, lead dev for Raven Coin. There's a small team, large community out there. And it's a platform for, it's like Bitcoin in that it has its own cryptocurrency, but that you can all create its own familiar with Counterparty or something like that. Yeah.
Okay, got it. And Bradley, I think probably did an intro earlier today, but for anybody who wasn't here.
Yeah, so I'm a YouTuber. I have a show called Investment Perspectives, and I also just recently went into post-production with a documentary on cryptocurrency called Cryptonaires, and I'm very excited about it. Many people. Tron, I wish we had the opportunity to get you in it.
Excellent. And
there's still time.
Sorry, missed the intro on my last because nobody can
The
hear me.
The sequel.
I'm Josh Lawler. I'm an attorney in securities law and intellectual property, and particularly focused on distributed ledger technology from pretty much all aspects. Currently also focusing on a side project that's targeted towards bringing kind of a wider and easier pathway to compliant capital raising using tokenized assets and specifically income sharing agreements. So, I think in terms of the Wall Street foray into crypto, I think it's a giant case right now of they love to be foraying, they try to be foraying, and they're not quite able to quite foray yet. I think, as far as what they've tried to do thus far, obviously you've got the regulatory challenges, historically, I think we put ourselves in a very bad position through kind of unfortunate abuse of the Main Street investor, which has now made it harder than it needs to be by far. Tron, Raven Coin is an asset trading platform. So, how do you see kind of distributed ledger technology kind of fitting into the transfer of digital value, I guess is the way to put it, and how that might hit the mainstream in terms of institutional money.
Yeah, so what I've seen is a split between kind of the low end and high end. There's things like T0, and they want larger issuances, and then there's people that are $100 million that say, well, we're not going to take the risk on doing this via a digital platform, and I prefer the kind of entering from the lower side, so like the Reg CF exemption or the Reg A plus and things like that. So because the digital technology brings the bar down so low and tracks things so well that you can drop it down so that you can invest, $5, $10, $100, and not start out with issuance of, you have to start in with $20,000, $100,000, $1 million. So that's what I see as the efficiencies bringing it down. And then some of the laws, I think, are adapting a little bit. The accredited, they're talking about, or at least doing comments on, moving from accredited, where it's a wealth-based test, to an education-based test. And then also increasing the Reg CF exemption from $1,070,000 up to $5 million, also under comment. So those are things that I think kind of move it in the right direction, kind of bringing it up from the bottom instead of down from the top.
But I think, you really kind of hit it on the Reg CF increase to 5 million, because, you can't really get too much done at $1,070,000, but you really can at 5 million. But that then, raises another specter, which is the money's been raised, and, there are people out there who are holding, widely distributed assets, I'll call them for now. But the folks who issue those assets are not necessarily as reliable to keep up their end of the deal in terms of, reporting publicly information that facilitates trading and things of that nature, to a point where, if they're treated as securities, there's an Exchange Act problem in terms of anybody making a market with them.
Yeah, I agree. I mean,
the question, I guess. Yeah. All right. All right.
This is Adam. Can I?
Oh, please go ahead, Adam. I can't see you on here, but.
Okay. Sorry. So I had to call in on the phone again, but where I come from is I'm actually a financial advisor. I have a registered investment advisory in Texas, and when you talk about Wall Street, you can, again, as I said, talk about the institutional investors. You can talk about hedge funds, whatever you want, or are you talking about Main Street? And when you think about the ethos of crypto and all that, it's meant for Main Street, right? It's meant for kind of the lower income earners, the everyman, and not the investors. So whereas, a couple of years ago, we all wanted Wall Street to come in, and that meant institutions coming in and buying Bitcoin because we wanted the price to go up. Now it's okay. We want adoption. We want everyone using this. So how do we do it? And we're working on educating financial advisors and educating bankers, because we feel like that's that intermediate step that if they get it and they're on board, then their clients are going to be on board. So the foray so far from Wall Street has been more of, in my mind, has been more of institutions, whether or not they should get in. And now it's you have companies like Fidelity and Schwab and such looking to, to custody assets. You have Caitlin Long's bank out in Wyoming looking to custody digital assets. So now you're going to start getting more small businesses and individuals involved, and that will be very different, very fun. Going to take a whole bunch of education, which I'm counting on because we've just launched the education.
Right. So, I think though, when you start talking about digital assets in kind of a mass kind of overarching term, it leads to a lot of the confusion we've seen, because, on the one hand, you can talk about institutions getting in, and on the other hand, you can talk about adoption. And they're not the same thing. If you've got a digital asset that is has a utility, it's intended to have a utility, and the aspect of it being a security is kind of the tail wagging the dog, then, that's one thing. And, for institutional adoption, it means something totally different because you can't have a widespread use case subject to securities trading laws. At the same time, these assets are still, basically gaining in value based on supply and demand value economics, and in a lot of cases need to gain in value in order to provide the right incentives for a consensus algorithm. So it's not like you can ditch the financial aspect of it either. And I think it's the fact that we're sitting in the middle there with a number of these assets that's really confused things as much as it has. Bitcoin's relatively easy. It's a digital currency, viewed as a commodity or property, depending on who you're talking to, but there's no separate use case the way there would be for, a number of other types of platforms, Ethereum, for instance, being one of them. There's a use case in Ethereum. It wasn't really intended to be money, but it can be used that way, of course, and then that leads to more confusion. I think I'm seeing a trend that I'm happy to see where Wall Street, as it were, has figured out that they want to use digital assets as traditional securities. And if you look at what the consortia are doing, if you look at, HSBC or JP Morgan putting, high yield bonds and, a couple $100 million runs onto distributed ledger tech, that in my mind is a great use of distributed ledger technology. I wouldn't call it a cryptocurrency, even though it may be tokenized and it may be an asset. And I think that's where the main foray is going. We just had 11 class action lawsuits filed on Friday, I think it was, against the major exchanges for trading in unregistered securities in 2017 and 18. And I do think that those hybrid types of things can't survive in the existing Wall Street culture. It's got to be somewhere between the New York Stock Exchange and eBay. That's all I have to say about that. Bradley?
Yeah, no, I just wanted to expand on it. Josh, I thought that was a great point. I mean, what I say in similar fashion to what you're talking about is we're going from the wild, wild west to the government control, government regulation, to some people's extreme, the Orwellian approach, right? Where you're going to see, if you want to see the big money come in, whether they classify it as security or a sandwich, it doesn't matter. They need the regulation that reinsures them that their money moving across those payment rails and these new networks and these new protocols guarantee at what point am I responsible and what point is the receiver responsible. And until they really resolve that issue, I don't think we see anything become a security or otherwise, because they're stuck right in that moment. They still haven't truly defined what it is we're dealing with. And to your point about Wall Street's looking at this thing as securities, we're still seeing a good portion of these things as commodities. At the end of the day, they need to get on the same page with regulators so they can open the flow to bring the money in and be able to truly invest in this market. There is a huge fragmentation in this space when you look at it compared to the traditional markets. So
that's an interesting way to put it, because when you say get on the same page as regulators, I start thinking Fantasyland and rainbows and unicorns, because I have a 6-year-old daughter.
Sure.
Tron, Ravencoin's a very interesting platform because it has the capability to trade assets, where an asset is defined in the broadest sense of the word, as in it could be a security, it could be a cactus.
That's right.
And from that perspective, how do you see things shaking out on Ravencoin in terms of how people use it? Does that become a form of exchange in and of itself?
Well, I think that's one of the reasons I've ended up in this kind of like learning about the regulations was to say there, it really can be a token that's a utility. It can be a token that's like representative of a piece of art or of a building, which may be a security because it has rents and things like that, and may pay out. It can also be just like a gift certificate or an hour of my time, or it could really represent anything. There was a pretty good article by Security Token Academy, Derek Schloss, that basically kind of separated the legal from the transfer layer, and kind of say, hey, things haven't changed all that much. What you really need to do is kind of separate it and say, look, this is the transfer layer. It might be the same as the spreadsheet in the lawyer's office, or it might be the same as the database at the DTCC, or maybe, that kind of thing, and separating that from the legal. And the legal still is in place, right? Whereas if you say it's something where it represents a share of a company with dividend rights and all of those kind of things, it still has the legal still applies, right? Still, it is a security, and all of those things apply. And kind of separating those two, because the digital ledger is really only part of that. And in Ravencoin, we kind of do all of them, because Raven is like Bitcoin in the sense that it's kind of commodity. And the tokens that you create can be NFTs, which could be a digital twin, could be representative of something that's a unique item that you want to hold as a collectible, because there's only one of them guaranteed. Or it can be a collection of tokens that could be a security, could be a utility, could be representative of a share of something. So it's I think it's the Token Taxonomy Act to try and break these things down and say, what are these things, right? There's different categories of them. And I think getting a handle on that type of thing is important, and then things can kind of move forward.
Yeah, I agree. And I think that that's actually really a first step. I was disturbed to hear from some of the Chamber of Digital Commerce folks that the Token Taxonomy Act didn't have a chance in hell of actually getting passed, because it took the Australian approach, which I like a lot, which is you're a financial product, great, you're a security. You're a commodity, great, you're a commodity. You're anything else, you're a consumer product, and we regulate those. There's something called the FTC. It regulates fraud in consumer product. And given it's a stretch for them because they don't have to deal with things like exchanges and rules of exchanges. But that said, if you can't figure out what these things are in the first place, you can't regulate them, which kind of gets back to the question, can the world change the regulators being involved? Is it possible to work, on-chain / protocols, on-chain or off-chain protocols that accomplish the policy goals, and thereby take it out? Because, if you look at the SEC, for instance, they've got two big goals.
Oh, we lost you, Josh. Or I did.
Yeah, we lost Josh. I lost him too, yeah.
In early markets and man. All right, hold on a second.
Hey, you're back.
Stable
you're back.
connection.
Yeah, we only lost you for like
I'm
5
back.
seconds.
That's good.
It was the meat of it.
Yeah, you're back.
Know what I did? Nothing. All right. I was saying, like, the question is, can people in the space come up with solutions to establish the policy and the reasons regulations? Because with the law fits, it doesn't want any more example of that than you need. Look at the Howey test, and you see it's the only thing subjective in all of securities law. And go and try to apply it to the Exchange Act. It works for the Securities Act because you actually have an issuer selling to a seller. If I'm on a secondary sale, there's no issuer. Who exactly is making the contract?
Exactly.
What if I say in my subscription agreement this isn't assignable? Well, okay, I said it legally can't have a contract, but you know what? It's still got those characteristics of being something investable. So, the law doesn't fit, and I don't think it's going to. I'm a cynic. But I do think that, I'm a big fan of the ERC 1400 standard, in part because of this. It's like, okay, we can force the restriction on transactions, not just because we want to stay compliant, but because in some cases it's the right thing to do. Mm-hmm. Anyways, my rants. If anybody wants to rant back, please.
Yeah, we built some of the technology that even though it's the transfer layer, and I just kind of argued for having the transfer layer and separating the legal layer from the transfer layer. Because of that legal layer, we built some technologies into the platform, tags and restricted assets, where the assets are restricted from transfer unless they've been tagged by some entity, and that may be for KYC reasons, maybe be for accredited, etc. But the token on chain won't move unless those tag requirements are satisfied. And so we've kind of blended it a little bit there between the legal and the transfer layer, but we're basically trying to give a tool set that people can use as issuers and still be legal and not allow it to trade willy-nilly without kind of their requirements being tacked onto the to the new owner.
Right on. So somebody in chat said I should call in, and regrettably, I've done that before, and it's just as bad. So
Yeah.
I'm sorry. I apologize.
Hey, this is
Nothing I can do.
You know,
But
hey,
I want to
this
switch
is Adam.
focus.
I wanted to point out something
Yeah.
else. I wanted to point out something else in terms of Wall Street that I noticed being on Twitter and everything, LinkedIn and everything else in the last few weeks, is there have been so many, again, in my community, especially in the financial advisor, financial analyst community, that they were almost waiting for this big drop in the stock market and to see what would happen with Bitcoin. And when they saw Bitcoin go down too, they could not quickly enough write about how this narrative that those of us who know about it have been trying to spin, which is Bitcoin is the safety asset, right? Bitcoin is where you go to be against the market. That didn't seem to hold, and they all kind of threw that out there really quickly. Of course, in poor taste, as the rest of the market's dropping, going to see, Bitcoin's not the safe haven. But now they've kind of lost their steam because Bitcoin came back, and even more days when the S&P has tanked than Bitcoin has not tanked. So that's something else to point out when you start looking at Wall Street. Is there are so many advisors and analysts that don't understand it and don't believe in it, and they are waiting to just be anti anything crypto related, whether it's security tokens that represent real world assets or not. Anything that says crypto or cryptography or blockchain, they're completely against. And that's something that's kind of against those of us that are in the know and frustrated about it.
Yeah, and I think that bridges actually to another point, which is, Wall Street's foray here also includes the fear of becoming the next Polaroid, Circuit City, or Blockbuster. And these guys are all very smart. Some of them have been my clients over the years in terms of these institutions, and I think they've realized that danger is there. So they've been active in exploring things. But at the end of the day, even if they adopt the technology, I think they're kind of concerned that they're going to lose some of their income streams, because every time something transfers from one place to another, which it does 7 or 8 times before settlement these days, somebody's got a handout taking a little skim, and that can't survive as a survivable business model. So where does that leave you if you're JP Morgan? It's like, okay, we're on the cutting edge, but now we're in competition with Walmart for remittance, which they are, and we can't keep our profits running, which is a huge deal. Anybody want to comment on that?
I mean,
All right.
I would just say that this is the changing.
So
go ahead, Adam.
It's interesting you mentioned JP Morgan, because someone mentioned them earlier with their coin. And we all know there's a difference between Wall Street being all in or in on blockchain and crypto from an investment standpoint, and being in on it from a blockchain efficiency. This can actually help. We can actually utilize the technology regardless of the crypto aspect of it, right? So I think bigger Wall Street companies are starting to see we can utilize the technology and drive some efficiencies the same way we did with the internet 20 years ago. So when the fact that JP Morgan on one hand was saying that crypto is bad, and then a few weeks later announced that they're creating their own coin, whether or not they actually launched it is different. But the fact that they actually that's a possibility, says that they're behind the technology, and they're not dumb, right? They're looking for how they can be more efficient, make their investments go up, get more income, all of those things, and they're not completely dismissing this.
No, but they will have more competition and less rent-seeking opportunities, and so that's a good thing.
Yeah, and I think it points to the larger narrative that they are going to have to shape shift and readjust to this new innovative framework that's out here. If you don't, you'll die. Everything's constantly changing. They're going to have to make that change. I think the question in front of them now is when they find out where they can make these new revenues off of transmissions and settlement charges and things like that in these new areas where they have these exchanges happen. What are they going to do with the walled garden they run into when someone else doesn't want their token or their product? What happens between them and that other person when you finally reach that position through the transaction where somebody maybe doesn't want the JPM Morgan coin? Well, what happens then?
I'm going to say a wave of mergers and acquisition, which I've been waiting on for quite some time, because JP Morgan will then acquire whoever it is who has the token that people want. I'm not kidding at all. That I think
that's real.
That's going to head.
Yes, sir.
Yeah. The other one that I'm interested in is, the various crypto exchanges that now allow you to stake through the exchange. And, put aside for a second, the issues with Steem and Hive and Justin Sun. But does that look to anybody like depositing your money in a bank to get interest? Because that's what it looks like to me.
Exactly right.
I started looking at that and I'm kind of like, okay, so these are the new banks that are coming in. This is Netflix to B of A's Blockbuster. Be interesting to see. Hopefully, they're less exploitive than current banks. I don't know.
You make a great point, because if the exchanges,
well, the problem is, from a theoretical perspective, if they're the new banks and they're going to offer all those services, then everything they do is going to revert back to exactly what banks do.
Yeah, but
they're
one except you have exit
or any different.
Yeah, thank you, Tron. Exactly where I was going to go. You want to explain that real fast?
Yeah, you have the opportunity to just take it back and to take it somewhere else, and that's something that gives you, it's a counterbalance to the oh, you got to come to us because we're the only ones that can provide a service. There's a Balaji does a Severinson, I can never pronounce his name, does an amazing talk on that.
To counter that point, because I think that's an excellent point that Tron's making, is that if exchanges are going to be KYC, AML, CFT, and travel rule compliant, and you're going to see them be able to get the banking level, and this looks a lot like a savings account or even a checking, however you want to expand it to, well, how much longer is it going to be before banks are offering crypto? And Main Street is going to be a lot more comfortable going to those banks buying where they've had an account for 30 years.
And hence the birth of the digital dollar when it really actually happens.
Yes, sir. Yes, sir. Long live crypto.
Long live crypto. Whatever happens, it will be digital. I mean, that part's gone. I mean, even the government wants to get rid of cash. The government hates cash. I look forward in 15 years to the IRS telling me how much I owe in taxes instead of me filing a return. There is that.
All right, guys, we need to wrap.
All right.
Yeah.
So I thank everybody for tolerating my really crappy bandwidth. It's been a great panel. And I'm going to go fight with cock right now, which is something I do on a regular basis.
It was a pleasure to speak to every one of you. Take care.
It was great being on the panel.
Right there with you.
Thanks, Coach.
Thank you.
Thank you, everyone.